Travel showing no signs of cooling off this summer, with demand and prices expected to remain high. Joining us right now with a look at what to expect from this season is Geoffrey Ballotti. Do I pronounce that right?
Geoff Ballotti. Yeah.
Geoff Ballotti. I was president and CEO of Wyndham Hotels and Resorts. It feels like everything is still on a rocket ship, but do you see any end? Where's the rainbow? I mean, usually there's an end to the rainbow.
There are no signs to slow down. 93% of our middle-income guests are telling us that they're going to take a vacation in the next 6 months. And that is the highest percentage, Andrew, that we've seen surveyed since this pandemic began, wanting to vacation. And all of the indicators, everything in terms of that rainbow that we're looking at, booking windows extending. So many people trying to find a vacation spot last summer, unable to find it. Average lengths of stay, as all of your guests have been talking about this week, continuing to lengthen. You just look at travel booking searches on Google now, up double digits. Our web traffic is up 40% above where it was pre-pandemic.
Right.
And 2019 was the high watershed, best year ever in this industry. What's so unique about our business is that it was back, which is pretty incredible when you think about it, that our business, we're the world's largest hotel franchising company, we had a better 2021. We were fully back in 2021 in the economy and mid-scale space than we were in 19.
Is this a YOLO? Are we still into this YOLO, kind of situation, or is there something else going on? And the other piece is we keep hearing from the banks that, American families are going to start to run out of cash. I mean, and move on to the credit card in a big way. And you're not seeing that. So how do you explain this?
We're not seeing that. Credit card spending, back credit card spending for April was up 20% versus where it was last year. Our middle-income guests are more employed than they've ever been.
Right.
And they're spending on vacation more than they've ever spent on vacations. Now, 70% of our business is leisure. The 30% of our business, we're very unique. We've been watching you talk all about who's back in the office and who's not in the office. Our guests, our leisure guests are middle-income families, but our business guests, they're not white-collar. They're all back, Joe, in the office
because they're
5 days a week. I mean, their office is the front
of the truck.
The front of the truck, the front of the construction vehicle. Their office window is their windshield. And when you look at the nation's infrastructure spending, the most historic bill this country's ever seen, we've seen now 11 consecutive quarters of double-digit spending from those construction workers, which is giving our small business owners.
How much do you benefit? I mean, one of the pieces we keep hearing about, we had Andy Jassy on the program, 2 or 3 weeks ago from Amazon, and he said he was seeing some step down, meaning people who are going to buy, a very expensive TV decide maybe I'll buy a marginally smaller TV. That, I would imagine, actually would benefit you if that's actually happening in the lodging universe. Is it happening in the lodging universe?
It's not happening yet, but were it to happen, Andrew, you're absolutely positively right. Our Days Inn brand, 1,300 hotels in the United States of America, performing exceptionally well because it never had to close during the pandemic, like so many hotels here in New York City had to close. $80 average rate. Our La Quinta brand in the upper mid-scale space, let's say it's $120 average rate. The differential, to your point, between an upper mid-scale and an upper upscale continues to widen. So what was $75 before the pandemic hit in terms of the difference between those two rates is now over $100. So absolutely, if there were...
Inflation in your space is crazy. Can we agree on that?
It is, but it is still, when you look in real terms, in the economy and the select service mid-scale space, average daily rates are about where they were back in 2019.